You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central, 1 p.m. Eastern. It is time once again to view some volatility. Yes, it is time for Volatility Views, the premier program for volatility traders. Good thing for us, there's actually some vol to view today. Pretty much everywhere in the market. Pick your poison. There's some vol to talk about. Before we get there, I want to remind you, of course, wherever you're listening to this on Apple Podcasts, Google Podcasts, Spotify, could be your YouTube, could be app stores. Make sure you rate and review on most of those outlets. You can leave a comment, I think, on the old YouTubes as well. Wherever you're listening, it does help new folks continue to discover this content. As we can see yet again today, it's more important than ever to have a reliable, a sane source of information in these trouble. I've heard more outlets trying to explain this GameStop thing. Sports outlets are talking about it. Technology outlet, Enter to Everyone, is trying to explain Gamma in GameStop with middling success, shall we say. So these are times when you want to turn to an outlet that talks about this kind of stuff. So keep those ratings, those reviews coming. It does really help folks discover the content in these troubled times. And we have seen a large number of folks doing just that these days. And let's see who's joining us to help parse all this madness. You know, when I see madness on the screen, there's only one place I want to turn to. It's a little intimidating. It's a little off-putting because it is indeed a lurking, looming, ominous fortress on the shores of Maine where the waves are crashing, the thunder and rain crashing down from the heavens, lightning illuminating the sky. That's where we find the GIOVINAZZI compound. And we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. He's been around for a bit. He's traded through a sell-off or two. Mr. Rock Lobster, welcome back to Volatility Views, sir, on this nothing going on Friday, sir.
What are you doing? I'm just scolding my website team to actually put links to describe how vol works and gamma works and all that stuff on the front page of our website, but to connect the links to actual data, actual videos.
That would probably help if the links actually go somewhere.
Well, you're trying. You're trying.
Because otherwise, it's just text. It's not really that useful for anybody.
It just says 404, and
All right. Well, you get your website fixed. We're going to head right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. You know what time it is. Time to review the volatility that is lighting up the tape. And like I mentioned, there's a wee bit of it on the tape today. Coming into the showtime, usually my joke these days is, it's a day that ends in Y. There's green on the screen. Not so much today, listeners. Most of the major indices, after selling off on Wednesday, then getting most, if not all of that back yesterday, giving it all back and then some again today. Every major index off north of 2%. The Dow and S&P both about 2.15%. NASDAQ off about 2.25%. All that red on the index screen means green on the vol screens, and that's pretty much what we got right now. Come into showtime, we saw both spikes and VIX cash hovering right around 35.25. That puts them up, a wee bit since our last show. About 14.25 points each since our last show. I don't think anyone quite had a 35 handle in their crystal ball, but I'll have to go check to make sure. But I don't think we had anyone who was that optimistic on the vol front out there. Good old VVIX, the vol of vol. Yeah, that's moving, as you might expect. 143 up 29.5 handles from our last show. We talk about, can it, hold on to that 120 level? Yeah, it's way past that now. 143 out there. Of course, depending where you're looking, everywhere, barons, everyone and their mother is trying to tie this in, all this madness, this maelstrom of volatility in the broad markets, to tie it in to the absolute frenzy that continues to happen out there in GameStop. My opinion on these things. More sellers than buyers today at the end of the day. Trying to draw these tenuous ties is sometimes difficult and indeed a foolhardy errand. But nevertheless, it is impossible to escape the madness that is Volatility Views. That is GameStop this week on Volatility Views. We were talking to our buddy, Mr. Matt Amberson, just yesterday on TWIFO. And he's been trading options even longer than I have, I do believe. Maybe, not sure if longer than the Rock Lobster. We're pretty darn close. And he was saying that he actually was trading some verticals and trading some options in GameStop with a literal 1,000 implied volatility, something I've certainly never seen and he's never seen in the entire history of his career. Maybe you're talking a few times in some absurd pink sheet stock that's a couple of bucks that happens to have some options on, maybe, but not in any name that people have actually traded and heard of and with any sort of gusto. Yet 1,000% implied volatility. You're talking 5x, the apex of vol in Bitcoin, an instrument that most people say is absurdly volatile, got up to around 200 at one point. 1,000, forget that. GameStop laughs at that. So GameStop is very much a volatility story right now. And I've said it before earlier in this week. It is still even more true today that we are all living in a post-GameStop world. The ramifications this is going to have for everyone that plays in the markets and trades and looks at these things going forward are incalculable. This is going to be going on for quite some time. So you have 1,000 vol, which is already crazy. We had so much madness. We talked about this. In fact, this kind of broke during our options bootcamp show on Wednesday, some of our listeners started hitting us up saying, hey, I'm actually being prohibited from opening transactions on a lot of platforms. Seems like IB was in the vanguard of that, but others followed suit pretty quickly, including quite infamously Robinhood. We'll get to that in a second. So that seemed to tamp down the speculative frenzy. Most of the brokers saying no to this anymore for a variety of reasons, which are very controversial. They're not today. Some of those restrictions being lifted, and we're seeing the frenzy a little bit back off to the races in names like, let's say, AMC up 5.25 handles to nearly $14 again, and good old Game itself at 329.5, up a paltry 132 handles right now, or nearly 67% on the day. Now, of course, this has caused just the backlash of all backlashes. I guess, Mr. Rock Lobster, the first lesson is don't call your firm Robinhood and then be perceived to be taking actions against the little guy, because rightly or wrongly, it's going to come back to bite you. And that's exactly what's happening to Robinhood. It's so insane that Ted Cruz and AOC actually agree on something. They both want to hold Robinhood's feet to the fire and all these other brokers with hearings out there. You got everyone chiming in. Jon Stewart joins Twitter just to slam Robinhood and Wall Street and all these brokerage firms out there. The Winklevi are going on about this great conspiracy. Elon Musk, who's never been one to shy away from conspiracy or slamming short sellers, he's diving into the fray. Citadel, kind of, unless you're in the business, a pretty obscure market maker / hedge fund. They were trending on Twitter for quite some time, as now they're being held up as the mother of all boogeymen, who's the puppet master behind what's going on at Robinhood and these other brokerage firms. So conspiracy theories are abounding left and right. And, when there's conspiracy, when there's uncertainty, when there's perhaps a little bit of deep-rooted cynicism, I turn to the Rock Lobster. Mr. Rock Lobster, so much has happened in this, even since last time you and I just chatted, which was yesterday. So what are your thoughts on the brokers coming in, doing the old shutdown, and then getting a huge backlash, and then backing out? By the way, we have a poll on this. We'll get to this a little bit later, which Schwab actually chimed in on. So we'll get their thoughts in a little bit here on the show. And then lifting it, the massive movements, the 1,000% volatility in GameStop, Citadel being put out as the boogeyman of all boogeymen, Robinhood, huge backlash, and maybe there goes their IPO. There's so much to unpack here, sir. So have at it.
You know what? This is a show chock full of subjects. I don't even know if there's enough of us to go around on this one.
Might need a 3-hour vol views today, sir. What do you think?
Oh, benevolent dictator of the volatility reviews program. So a couple things. So to answer your question about Matt Amberson, he actually broke into my pit when I was the DPM, when he was just a wet-nosed little snotty trader.
So you threw some shade at Mr. Amberson back in the day.
I did. So that's how old I am, by the way. So we got that going for us. I also had another famous person break into my pit, named Pete Nigerian, actually. Broke into my pit.
Was he ponytail in hand back then as well?
Oh, yeah, right, fresh from football. And then,
did those guys play football? I didn't know that. They would never have mentioned that to anyone publicly, I don't think.
He wasn't small, but you know what? He's a nice guy, so it was kind of hard to haze him. But that's another story for another time. But anyway, those are the two famous people that broke into my pit. When I was, I wasn't very old back then either, probably 26, 27. But anyway, as far as this goes, Little Birdie told me about the Robinhood thing. I think, to be honest, they handled it poorly, very poorly, to be honest. They could have easily said, hey, in 2 days, we're going to increase the margin. The Little Birdie I heard said it's a collateral problem for Robinhood. Maybe some customers are getting out over their skis on some of these position-wise, margin-wise. Remember, they are an SEC, FINRA-regulated firm. They need collateral and margin. They might have had dollar problems. They might have had to go borrow money. And maybe to borrow that money short term, they have to put restrictions on trading. They don't want to, blow things apart, essentially. So under normal circumstances, they probably had capital, but it is possible, new capital requirements, something like that. So they needed money in the short term. Again, this is a Little Birdie on this. So while I understand the reasons probably why they did it, because ultimately, The easiest way for me, because I'm like basically a full transparency guy when it comes to the markets. So you want to stop people trading like this, charge them 90% margin, right? You want to stop them speculating for no commissions, charge them 90% margin. Like, hey, you want to trade this? Put all your money up and do it, Take the risk off the clearing firm, which is, if I'm a clearing firm, that's what I want to do. You can't have people going in here at 50% margin, buy the stock at $500, and then it goes down to $300. That's a problem for them. So you also have to, sometimes what I teach my students is you have to the easiest way to learn how to trade options is to stand in the shoes of the liquidity provider and look at it from their point of view, see what's going on with the vol, because of course that's what I did forever. And it's easy to teach people about volatility that way. So as far as Robinhood, if you stand in their shoes, like, by the way, Vlad, and of course it doesn't help that, day trader Dave Portnoy calls him Vlad the Impaler.
Yeah, it's a name that lends itself to certain descriptive terms, shall we say.
Yeah, it's like none of that. If anybody knows how to market, it's that guy, right? He's a genius. So the Robinhood guy, not good on TV and marketing. Okay. So, and even they had he could have explained the problem with is he had to tiptoe around it, which was basically saying we needed money to make a collateral payment, which I think is the most logical reason. And the smarter thing I think would have done to say, hey, you know what you got to do? You got to put up more margin if you want to trade these things, because, you're not really becoming a Robinhood investor. You're just mostly just slinging one lots, right, to see what happens. So from that point of view, ultimately, if everybody blows out, then nobody wins. So, if Robinhood blows out, that's a problem, right? So you're trying to create, you don't want to create, they have a situation, they don't want it to become a problem, right? And that's where I think the things have. Of course, I'll probably get all kinds of, the board will get lit up. But I believe that was the issue. Did they handle it well? Clearly, from a PR point of view, they did not. But it's also hard to say, hey, we needed some money because too many people were losing money, right? Because don't forget, there's going to be winners, right? Those are all the people that post their stuff on Reddit. But there's also people that paid $400 and sold it at $225. So, and if they do it on margin, that's a problem for Robinhood. So you got to, you have to go through all the iterations on this. So that's one thing. 1,000 volatility. What does that mean? 1,000 volatility basically means, and Volman posted that the other day, they're basically saying, piss off. You're not getting any more option liquidity from us. We're done. If you want to do something, knock yourself out. We're $10 wide, 1,000 vol. Go do it. We were actually trying to execute some stuff in our options market show today, where you could buy AMC stock and you could sell the straddle against it and collect a credit, right? Now that was lining up, and we were trying, like, one person got it done, like a one lot. And then after that, nobody could get it done. And then Toss said he can't do it. So I'm just saying that it's a mess, right? Like it's a total mess. They want people to basically stop speculating in these things at this point, because it's gotten totally blown sky high. How much more GME is going to go up? I don't know. Who knows? The company has some value, probably not $300 a share, but right now that really doesn't matter, right? Because that's what people are paying for it. So it's a speculative frenzy. It will die down at some point. I think if they just charged everybody full margin to do it, it would be a different story. The options, I think, at this point at 1,000 vol are untradeable. So, and I think that's the point, right? They don't want to trade them anymore. When now the vol has actually come down to only like 670 in the Feb cycle. So the 580 straddle, what is it? The 325 for three. So the 337 straddle in GME is $300 for Feb 12.
There you go. Buy it right now. Done.
So, that's where it is. It has to be somewhere, and that's where it is. It's because the stock can move $150 in 2 minutes. So how do you, like when we say all the time with VIX and relative pricing, it is all relative, right? So if the stock, no liquidity provider is going to sell you a 340 call for $5 if the stock is going to move 150 bucks in 20 minutes. It's just not going to, they're not that stupid, Okay, we'll sell it to you for 150 bucks, right? And then you go take your chances. So I mean, the way I look at it, the ball's fairly priced when it's moving 66% or 100%, every 3 hours. Like it's fairly priced volatility. Have I ever seen it this high? No. So I mean, just on that point alone, I think that's where we find ourselves on it. It's very high vol, but I think they should just basically give everybody a 2-day warning. Say, hey, listen, it's 100% margin now. You're all in. So every 100 shares is going to cost you money, 20-something thousand bucks, and let's see if that kind of damp things down a little bit. But people are going to get scorched in this. Some people are going to do very well, and other people are not going to do very well. So that's my opinion on all of these subjects all at once. Besides VIX just trading 36, with the market down 2%. I think what also another thing is we seem to have a pretty big slew of tech earnings, and it really hasn't made the headlines, right? I mean, have you heard anything about Apple earnings or?
That shows how big GameStop is. On the day of Apple, Facebook, and Tesla earnings and a Fed announcement, nobody gave a crap about any of that.
Nothing, right? Not a single thing. So I find, I think, having all the oxygen leave the room because GameStop is going up $100 a day. And of course, people are kind of drunk on these huge gains, right? You have Plug and Riot and Bitcoin and all this stuff just blowing up sky high. And we talked about this, like vol is on the upside as well as the downside. I'm sure Don will come back and say, hey, he would say sometimes there's time to sell or not to sell. And this is a not to sell time because you sell a call for $5 and it goes to $45. How many of those you want to sell? And how manageable is that position for a liquidity provider? And I would say not very manageable, right? Tough position. So, you have to see how things are trading and kind of make your adjustments accordingly. That, at least the way I see it. And I think that's what we have. So we had Apple earnings, and the Apple earnings were pretty good. But again, the stock is already priced for phenomenal earnings, right? After the split, that's like a $400 or $500 stock. Boeing had pretty awful earnings, no surprise, because nobody's buying any airplanes right now. Facebook did okay, but again, priced for perfection. Tesla, do the earnings even matter with that company? Because almost every time they have earnings, it seems like it sells off somewhat because people look at how much they make versus what the company's worth, and they go, okay, well, I'll sell some here. So it's profitable and it's worth, that's what everybody's saying. It's a profitable company, right? It's a profitable technology company right now. That's another thing. I like it that Tesla is now a technology company. It's not a car company. So it's easy for tech company, you can put any valuation on a tech company you want. And I think the street has put that kind of valuation on Tesla because, I think it's great to sell for them. But anyway, you've got a lot of expensive stocks. You got a pretty high S&P 500. You have still a lot of people not getting back to work and worried about this stupid virus. And it's still a real problem. It hasn't gone away. The vaccine thing has basically rallied the market from 3,200 to 3,800, the fact that we're getting a vaccine. So a lot of the euphoria for getting back to some sort of regular economy without the government having to do this, paying people every 6 months. We're kind of at the end of our rope. The earnings came out and, it's not unreasonable at this point for, just where things are priced. I mean, it's very easy for the market to move 2%, even though the realized vol was so low. The market can move so fast very easily, and nobody's selling options, right? That's another thing with the GameStop. GameStop is just one of many stocks, and one of many stocks that the public is not selling calls. And when the public doesn't sell calls, there's no liquidity for the market makers necessarily, because as you know, how many calls did you buy in your lifetime as a market maker, right? You bought zillions of calls, you wrote stock against them, and just hoped that all just didn't go out worthless, in the summertime. So right now that doesn't exist, and that's why the vol's so high. So there's a lot of cross currents going on, and that's what we've got.
That is indeed what we've got there. A lot to unpack. We'll come back to all the brokerage stuff and GameStop and everything in a second. We'll do a little bit of a run through. It is Volatility Views. We could spend the whole show on GameStop because it is, quite frankly, the volatility events, not of our lifetimes, but it's definitely a turning point for many things. And these are people who've been in the markets for a long time telling you this, listeners. So pay attention. It's not just some hysterical person on, let's say, Twitter saying that. Let's move on really quickly. Like we said, all the major vol products elevated this week. The futures curve in VIX land, do I even really need to tell you? It's super backward, super crazy, super juicy. Call it what you will. We've seen pretty much 5-point swings in the Feb and March future compared to last week. They're both trading actually at about 1.5 to 2 point discounts to the cash. That's how crazy the cash is now. The cash is off on its own planet again. So these futures that were trading at about 2.5 point or so premium, 3 point premium to the cash last week are now trading at a 1.5 to 2 point discount to the cash. That's how much they're already juicy, but the cash is kind of on another planet yet again. Both of them had about 5-point swings there, the Feb and March future. So crazy town indeed. Spikes options, pretty similar breakdown to what we saw last week. Top positions are pretty much that massive three-way we saw go up a few weeks ago. The Feb 40, 32.5 vertical against the 29 puts up there are the top three positions, all for pretty much 1,000 and change each. As of a few minutes ago, VIX doing a wee bit of paper, I think you could say. VIX actually lighting it up a little bit. It was coming into the start of the show, we saw it was already at 423,000 contracts. As of a few minutes ago now, it was at 603,000 contracts. If you're wondering, that's north of the ADV. The ADV is 573, and that ADV has already surged dramatically. It's up 100,000. Since our last show. Our last show, it was, I believe, 474. So 99,000 contracts. It's up pretty much 100,000 contracts. That shows how much paper VIX has been doing this week. We'll break down today's action in a second. First, let's break down the top 10 hot positions out there. We've been talking about the VIX fade for some time. It's been hard to find a VIX call in the top 10. You had to look pretty far. For a long time, there was only one call to be found in the top 10. Last week, it got up to 2. And dare I say it now, this week, there are actually 3 calls in the top 10 positions in VIX right now. I bet you all these people wish it was all calls right now, but c'est la vie. That's where we find ourselves today, listeners. It cost you 158,000 contracts to break into the top 10 in VIX land right now. They get you all the way to the Feb 50s, 5 O's. We were looking at that strike with questioning eyes last week. This week, it's still pretty far out there, but not quite as much as it was this time last week. That's followed hot on his heels by number 9, 159,000 of the Feb doubles. So a little bit of funky vertical. I think we were talking about that on the show last week, actually, how that one, it's kind of weird, so tight of a vertical that far out. Doesn't really make a lot of sense. Number 8, $1.67 of the Feb 20 puts. So now we're back to the puts. A little bit of a put strip going up here for a while. Number 7, 170,000 of the March 21 puts. Our first of 2 March positions on the list here. Number 6, 186,000 of the Feb 17 puts. Number 5, our other March position, 197,000 of the March 17 puts. Number 4, 208,000 of the Feb 15 puts. Number 3, our final call in the top 10 here, 214,000 of the Feb 60s, 6-0. Starting to get some of these percolating back in the mix here, listeners, which is interesting. Number 2, 222,000 of the Feb 18 puts. And number 1 with the bullet out there this week, 387,000 of the Feb 21 puts here. Good for about 7.5 million contracts open. Looks like about 3.7 million on the puts and about 3.8 million on the calls. So still kind of neck and neck out there in the OI from a put to call perspective, which, again, if you follow VIX, that's weird in and of itself. Let's see what was lighting it up out there today in VIXland, listeners, if you said it's probably calls, you would be wrong. The number one most active contract out there today, Feb 25 puts, 31,000 of those bad boys on the tape, followed by number 2, the Feb 30 calls. So there's your call, listeners. 23, almost 24,000 of those. Then we get out some good stuff. Here we go. Number 3, 23,300 of the March 150s, 150. They lifted the offer, looks like, on those. Oh, wow. 150s. I need to unpack that one a little bit. Number 4, I'm going to come back maybe while Rock Lobster's talking and dig into those a little bit. Number 4, the Feb 35s, 20,000 of those. Number 5, 20,000 of the Feb 40 calls. Wow. 150s. Let's go out to yesterday. Yesterday was a big dog day out there in VIXland. Almost 1.5 million contracts on the tape. The number one most active contract, 104,000 of the Feb 23 puts, followed by 62,000 of the March 60s, 61,000 of the Feb 42 halves. Number 4, 54,000 of the Feb 35s. Getting a theme here? A lot of calls. And number 5, the March doubles, 54,000 of those bad boys as well. So it seemed like a bit of a funky, the exact same size. That's interesting in the March 35s, March 55s and Feb 35s. That's interesting as well. Wednesday, also a very active day, 1.25 million contracts. Most active contract, Feb doubles, 141 on the tape, followed by number 2, the Feb 60s. Again, funky, tight verticals, 128,000 contracts on the tape there. Number 3, 61,000 of the March 23 puts. Number 4, 46,000 of the March 19 puts. And number 5, Feb 40 calls, almost 41,000. Tuesday, much lighter day, 466,000 contracts on the tape. Even still, though, pretty sizable contract. The Feb 19 puts doing almost 100,000 contracts, 90,000 and change. So of that 466,000 contracts, 90,000 coming in the Feb 19 puts. Someone has an axe to grind there. Number 2, 17K of the Feb 22 puts, 16,000. Number 3 of the Feb 25 calls. Number 4, about 16K as well of the Feb 25 puts, and round out the top 5 on Tuesday, 15,000 of the Feb 40 calls. And Monday, also an active day, but not quite the 1.5 million level, 537,000 on Monday. The most active contract, 41,000 of the March 22 puts, 28,000 as well of Feb 21 puts, then March 21 puts. Both are about 28,000 there. Number 4, Feb 32 halves, 28,000. And number 5, the Feb 26 calls, 23, almost 24,000. There's a lot to unpack here, Mr. Rock Lobster. I know you told an interesting story yesterday on the option block about your saga trying to get some upside off. I believe it was in VXX. You can probably make the same analogy there for VIX. And then speaking of upside, how many of these March 150s did you buy today, Mr. Rock Lobster?
I know, huh? Like, oh, hey, 23,000. It's, what's weird, the thing about the volume, a lot of call buying, and what I usually with volatility, which I find interesting, at least from a trade point of view, is like when you have this contango vol, like the front month, basically the liquidity providers like saying the front month vol is lower, right? And they're not, there's a lower vol expectation short term just because the implied vol is lower. And that's why you think vol should be coming down in the short term. And then it doesn't. Like it just sticks around here really stubbornly, not really going anywhere. And sometimes that's, I think anyway, it's a pretty good signal in itself. The fact that the vol's not going down, it's not coming off, the bid's not going away. Again, no willing sellers. So just to for the viewers, keep that in mind if you're looking at with things that might turn the market. Watching how vol trades is definitely one thing that could turn the market. The fact that folks are buying the 150s again, I think people are starting to think, traders are starting to think, you know what? There's some crazy stuff going on, man. So what the hell? Why not buy some? The vol in the February cycle has been very expensive for a long time. We were just looking at the pitch chat today, the at the money straddle and VIX, and we were only in, I think VXX was like kind of evenish for the day. Vol was a little bit evenish for the day. And the straddle was still $8, like the cap for VIX cash. It was the 30, I think it was a 30-31 straddle was $8. So there's plenty of room. There's plenty of room for vol to go up still. And I think that one of the reasons, it's just like GameStop, right? if nobody wants to sell option contracts, how fast does the vol go up? So, is it do we take some heat out of the market and things kind of relax and subside a little bit, or does the bid for vol continue gangbuster wise? Because now people start buying puts again because they do think the SPX can go down. There's a lot of cross currents. There's this huge spending package. You've got low interest rates. The vaccine is coming out, so those are all bullish things. But are they bullish enough to take us to higher prices? And then every once in a while, people are like, well, maybe some things aren't going to be as great as we think. They keep buying puts. Those puts keep pushing up the vol, and we find ourselves where we are. So you have these odd occurrences like GameStop, where all you need to do is sort of throw a match into a big barrel of gasoline, like you see those people do on YouTube all the time, right? They throw the gas on the fire to get it started. They think they can just toss a match and it's all going to be okay. The thing blows up in their face. So I think it's kind of what I feel like we have now in the market. We've got a big tinderbox. We've thrown the gas on there, and is there just one more thing to light it up? And you can see how touchy VIX is right now and how touchy the market is. So, and big tech supposedly being a savior for earnings. The earnings are really good, but where's Apple going to go when it's $2 trillion market cap and it's already trading at a 40 multiple? It's pretty pricey. Like, where's Tesla going to go right now? So it's hard to make a big bull case for some of those names. And I think we're going to see more. We're going to see more like vol buying. They're not going to really stop until we have a good reason, or the market can stop going up for a while. Something has to stop moving just dead in one direction, at least for a week or so, and just haven't seen it yet.
Well, we haven't seen madness like this in VIX in a while. I did a little digging while you were talking, Mr. Rock Lobster, and those March 150 calls went up around 11 Eastern here, 16,819 times. More of those obviously went up because we have a total of 23,000 here on the day. But there's a big chunk, the big block, 16,819. They were a nickel bid at 15 cents. They went up for 15 cents. They just gobbled up that offer. About 17,000 times. If you're wondering, Mr. Rock Lobster, that's a 191 volatility that they paid for those bad boys. And that doesn't seem to be associated with any other spread. The only thing I could find is about, a couple hours later, looks like someone came in for 10,000 of the March par calls, the 100 calls, for 59 cents. They kind of split the uprights there. So I'm looking at it through Trade Alert now. Trade Alert's saying it's a bid side. It's up to you whether you think they legged into it. If they did, that's a funky $50 upside vertical in VIX that they sold for 45 cents on a ratio. But it's still the par strike. So, Mr. Rock Lobster, how many of these did you trade today in your pitch chat, sir?
Exactly. We did not trade any of the pars, the VIX par calls. I have to be honest, we didn't get there. But I think that looks like a little bit of a curve trade, right? You buy the Feb, you sell the March Delta, and you buy the Feb Delta, and you're looking for, that trade is looking for VIX going to 50, right? Because cash explodes, the future explodes, the March doesn't go up as much as the Feb, and somebody has a nice little spread going there. So I'm looking at the calls right now, and because I sold a bunch of I sold a bunch of 35, 50 call spreads yesterday, and they're about the same place, so that's not too bad. They're a little bit higher. You can probably get 225 or 230 for them now. That's what we got. It's the same, the same MO. You're looking at where the vol is, and Feb vol is up 15 points. March vol is up 8 points. Vol, it's still going up, and it ain't going down. That's all I can say. So while the market kind of recovers in fits and starts, vol's still not actually, for just a little bit yesterday, we had that, what I would call VIX kind of went down hard, but the futures really didn't move a whole lot. Nobody went in there selling the crap out of it. So just take that kind of for what it's worth.
Let's take VXX for what it's worth as well. It's worth a lot more now than it was on our last show, listeners. About 20 3/4 as of a few minutes ago. It puts it up about 4.5 handles from where it was this time last week. So getting a lot of that juicy juice back there as that front portion of the VIX curve gets juicy. That tends to be reflected in VXX, and that's pretty much what we're seeing here. Also seeing a lot of paper on the tape, listeners. 488,000 contracts on the tape as of a few minutes ago. If you're wondering, that's way north of the ADV, which is already inflated. It's up 40,000 to 313,000 right now, but still blowing the doors off that today. Nearly 500,000 on the tape. Let's see what's hot out there in VXX land right now. Start with the top sizable positions. Cost you about 21,000 contracts, break into the top 10 in VXX. That gets you to the Feb 13 puts. By the way, if you're wondering, 1, 2, 3, 4, 5, 50-50 calls to puts here in the VXX top 10 here. That's been a little bit more heavily skewed in another direction of late, but now pretty egalitarian out there. Number 9, 21, almost 22,000 on the March 40s. Number 8, 22,000 of the Jan. Only Jan here. A couple other Jans, actually. Jan 20s going up here for number 8. Number 7, 23,000 of the March 15 puts. Number 6, 23,000 of the Feb 14 puts. Number 5, 25K of the Jan 25s. Number 4, 26,000 of the March 14 puts. Number 3, 30K of the March 16 puts. Numero dos here, 38,000 of the Jan 38s. And number 1 with the bullet, 66,000 of the March 20s. If it sounds like I'm blowing through that list, because we got so much stuff to get to, we're kind of coming up against it here. Total about 1.92 million contracts open out there in VXX. Actually, pretty evenly split, about 990,000 on the calls and about 930,000 on the puts. In terms of what's lighting it up today, the most active contract, 27,000, pretty much even, of the Jan 20s. Which, again, not that surprising. That is pretty much right around the at-the-money strike right now. Number 2, 18,000 of the Jan 21s. Number 3, 17,000 of the Jan 20 puts. Number 4, 13, almost 14,000 of the Jan 19 half puts. And number 5, the Jan 22 calls, 13,600. Mr. Rocklops, I know you guys were looking for some nice juicy erosion out there in VXX. Not so much, but you also regaled your saga of trying to chase some upside in VXX yesterday, but it was fleeting. Did you get any more VXX upside off today, sir?
I got a little bit off today. I would like to get a little bit more, but it's just sitting there like VIX is skyrocketing, but the futures, as they do, annoyingly enough, not enough to move the futures higher. So I got a little shot to get some off today, which was good, but not enough to make me truly happy. I would just say less grumpy. That's about it.
Well, less grumpy for you is a decided improvement, so that's a good thing out there. We could touch on UVXY really quickly. It's up about 4.25 points as well, about 14.5 from our last show is where it's trading right now. ADV is 276,000. That's up 37,000. And as of earlier in the show, they had done 275,000 out there. Not going to spend a ton of time on UVXY. You guys know my thoughts on that. Want to see how many it's put. Now it's done 440,000. So it's putting up some paper today as well. The top, let's do a quick top 3 in UVXY. Number 3, the Jan 11 puts 15,400. Number 2, 26,000 of the March 10 calls. And number 1 with the bullet, 31,000 of the June 5s, 5-0 calls. So some pretty meaty positions on there in VXX. Mr. Rock Lobster was alluding to earlier some individual name vol this week. And yeah, there was a lot of it. Of course, no one paid any attention to it. They were all focused with laser intensity on GameStop and related names out there. But there were some big names. This would usually be a captivating week of earnings volatility. Tuesday, Johnson & Johnson, GE, that one's been making some headlines of late. Verizon, Amex, AMD, a perennial top 10er. Microsoft and Starbucks just on Tuesday. Wednesday, of course, the big dog, Boeing, our friends across the street there, AT&T, NASDAQ, Abbott Labs. Everyone's been watching them in all this virus area, as well as Apple, Tesla, and Facebook. You may have heard of them. Yesterday, we had American Airlines, another one that's caught up in this short madness. Mickey D's, McCormick and Schmick's, the paint folks, Sherman-Williams, Southwest Airlines, interesting one there, as well as today, Caterpillar, Eli Lilly. So a bunch of names you've heard of. And yet, Everyone shrugged their shoulders on pretty much all of this. Let's break down a couple really quickly. Tesla, like we said yesterday on the option block, coming into their report, 864 and change. They're pricing in 8.5%. They delivered 5.5%. So light on the earnings vol front there. Of course, again, it's a frame of reference thing. If you hold on to the position a little bit longer, you probably get a little bit more bang for your buck. Tesla's down to 796 now. So they have sold off a wee bit, down another 4.6% today. So again, if you held on to it, this is all in the immediate blush after earnings is how they calculate this. So your time frame may change, and that may change your returns on your trader. Apple, same deal. They were pricing. They went into their earnings 142, pretty much even. They were pricing in 6.7%. They delivered a whopping 2%. So doesn't seem like, I was getting a little optimistic. Maybe the worm was starting to turn there from an earnings vol perspective. Does not seem like that is the case, listeners. Facebook, let's see, 272 and change going into their announcement. They're pricing in 7.3%. They delivered a whopping 0.6%. So that's about as close to a shrug of the shoulders as you're going to find in the FANG names out there, listeners. So perhaps my supposition that maybe, just maybe, we were tiptoeing up to that inflection point in earnings vol, not so much. I'm looking at the numbers here now. Matt's team also crunches the earnings season report. And so far, for the last couple of weeks, listeners, we are at a 54% for week one and a 58% so far for week two in terms of your actual bang for your buck. How much movement you got delivered versus how much you paid for your straddle. So if you paid $1 for your straddle and it moved $1, that's one. That's 100%. So you're getting pretty much 50 cents on your dollar right now if you're buying premium out there from an earnings perspective. So buyer beware yet again here in 2021. We got some big names popping off coming up as well. We got Baba and others, Amazon. We'll get to those, I think, on the option block because we got more stuff to get to with you guys. It is time for your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's get to it. The story of the day, story of the hour, story of our lives, listeners. The GameStop debacle. We have a lot of thoughts on this. You guys have even more thoughts on this. You posted a poll just yesterday after our option block show. That's when the heat was really starting to come on about these brokerage firms halting opening transactions. So we put out a poll that says we've seen many major brokerage firms banning opening transactions in GameStop and other heavily shorted names. Are they doing the right thing? And we gave you a bunch of choices. Said yes to protect the customers, yes to protect themselves, no, my money, my rules, or other. As you might imagine, Mr. Rock Lobster, this has drawn already a pretty intense response. We like to gauge how much a poll is rocking with people when you can see how quickly we get to like 100 votes. That's when people are starting to really get into it. And then it goes beyond from there. But this one, I think, got there in a few seconds. So people were into this one. And they had some thoughts to share on this. I won't even make you guess yet, Mr. Rock Lobster, because we have more to unpack here. So far, almost 81%, 80.7% saying no, my money, my rules. Yes to protect themselves, the broker, at about 14.6%. Yes to protect customers, 4.1%, and 0.6% saying other. Under that other category, Mr. Rock Lobster, I would put Charles Schwab. They apparently took some umbrage at our poll. They replied to us and said they vote for neither. They said Charles Schwab nor TD Ameritrade halted buying or selling on any stocks this week. We adjusted margin requirements to assure clients had sufficient assets to pay for stock purchases and restricted certain advanced option strategies. If you see our poll, you can see that's not exactly what we said at all. We said they banned opening transactions, which pretty much was the case out there, at least in terms of the options front, which is obviously how we look at these things. If you click on the link they included, they say both firms also restricted, well, I'll put it right here. I'll give you their language. They said both firms did adjust margin requirements on select stocks to ensure clients had sufficient assets to pay for stock purchases. Again, That's what Rock Lobster was talking about earlier. Not outside the realm of possibility that something like that could happen. People might get upset about it, but that's at least something that we could sink our teeth into. Then they also said both firms also restricted certain, quote, advanced option strategies. They said they can't sell naked calls, that sort of thing. But a lot of our listeners wrote in. In fact, I was doing a show with one Mr. Passarelli earlier this week on Wednesday live when he tried to buy a simple vertical in AMC on toss, and it rejected the order, said it was not allowed to do a simple vertical call spread. In fact, I was just chatting with him right now to confirm that. And he says that is indeed the case. You know, being an options guy, he tried to leg it himself. So he bought the meaty leg. Then he turned around to sell the out of the money leg, and then Toss said, no sales as well. So then it left him holding the bag on a meaty AMC option. He said he ended up scratching it for about $10, so it didn't cost him much. But clearly, there was more afoot out there than certain advanced option strat. If buying a vertical in a name with money you have in your account is an advanced option strategy, I think our definitions are a little bit different here. A lot of people chiming in on this, on Schwab's response. Ryan Yoder saw that. He said, yeah, restricted options to buying or selling individually, completely secured puts and calls. Since when is a long calendar or a credit spread an advanced strategy out there? Well, maybe a long calendar, maybe you could argue that, but a simple vertical shouldn't definitely be in that category. Other folks chiming in, MK Investments. One thing I agree with on the Wall Street Bets mod, he says this crime where the market is closed so banks can change price and then reopen should be gone one day. So that gets to some other stuff. We'll get to that in a second. Mr. Rock Lobster, what are your thoughts here on this heated debate about what brokers are doing, what Schwab is claiming they did versus what they actually did out there in the marketplace, sir?
Well, again, I think this is thing where is people don't get what's going on. All right. So just real simple. This is not normal market conditions, right? Every call that somebody sells is a potential exercise if the stock moves up huge, which Schwab then has to have the ability to deliver the underlying to the client, right? So right now, because the squeeze is so ridiculous, right, things aren't normal. So if they have the obligation, so let's say the stock goes up a bunch, the call gets way in the money, and then the long holder has to exercise the call because they need the long stock to satisfy Reg Show or something. So even a simple strategy becomes a difficult strategy for somebody like a Schwab. And that's what people aren't quite getting. Even though the strategy you think is vanilla and is covered, if you're the Schwab client and you don't exercise your call, now they have to go find the short stock. Even though technically your position is covered from a risk dollar point of view, you're long the call and let's say short the stock. So your risk is pretty much the same as it was when you just had the spread on. The dollar requirement is higher because you're now short stock instead of the call. Your risk is the same, but to Schwab, the risk is not the same for them because the SEC is going to come and kick them in the teeth if they don't have enough long stock on balance to satisfy all of the exercised calls. So everybody's got to understand it's not like, and I totally get, I think the way they handled this was wrong. The way that Schwab did is just, hey, we're going to jack up the margin requirements because of the risk. Totally fine. But this is not normal. This is not vanilla option trading anymore because, and I teach classes on this at Option Pit so our advanced traders understand, but this is a mechanical problem with like back office exercise crap, SEC regulations on Reg Show and shorting stocks and being able to cover and all that kind of stuff. So everybody's like, well, it's just a calendar spread. It's not a calendar spread from a risk point of view for Schwab anymore because they could be stuck in a position they don't want to be stuck at. So the listeners have to understand that it's not like this. It's not just a biscuits and gravy day for the back office and the clearing firm. I call them clearing firms, but whatever. Your retail brokerage. So you can get bummed out about it, but these things happen and there's consequences. The consequences are places like Schwab, they got real troubles if they can't make good on their obligations for all the exercise contracts.
I'm definitely with you on the calendar spread. I think that was a listener put that in there. That's his definition of a basic one. I don't think that would fall under mine in these crazy environments right now. But definitely we can all agree that the messaging has been poor. Unless you're talking IB, then Thomas Petterfie's just like, I allow no opening transactions on my platform. And then everyone's good with it. They kind of expect that from Petterfie, right? He throws the ban hammer down kind of wantonly over there. He doesn't like something. He doesn't like VIX. He's going to charge you a ton to trade. He doesn't like this. You're not going to open over there. But yeah, the messaging, whether it's Robinhood, whether it's Schwab, all of this is just terrible. And some of it you can understand. These brokers kind of got caught flat-footed with this. And so they're kind of doing this stuff midstream without much announcement. Like I said, Dan was mid-trade when he said he couldn't do it. There was no announcement ahead of time that says, by the way, you can't put this trade on or anything like that. So it just, the messaging, the execution, the way it's gone about it, how they're explaining this to their audience and to their users, taking umbrage at polls like, I like that. I thought that was kind of funny. It shows they're paying attention out there, but kind of interesting nonetheless when when what we're seeing out there is a little bit different than what's going on. And certainly, the Robinhood situation is another one entirely. Let's go on. We also asked this question, which is another contentious one, Mr. Rock Lobster. We said this GameStop frenzy is shaking the options world to its core. Some people are actually suggesting out-of-the-money calls should be priced much higher going forward to account for these potential eruptions. Do you agree? So far, our audience saying, no, this is the joke, with about 73%, 16.5% saying this changes everything. Yes. And what is happening is about 11%, close to it. And by the way, we've had a few people chime in on the network for yes as well. Uncle Mike was leaning in the yes category. Mr. Matt from Orats chimed in on the yes category. Yes, I think he was very much more focused, though, on some of these crazy shorted names, I would think, and how they're probably being priced a little bit differently right now going forward, rather than naked all out-of-the-money calls should be much more expensive. That's a different conversation. But still, what are your thoughts here, Mr. Rock Lobster, on our audience fading this, but the notion that perhaps far out-of-the-money calls need a second look, sir?
You mean they need the vol to be higher, right? Like the vol's not high enough?
At least 200%. 200% mandatory on all out-of-the-money calls. What do you think? Is that enough?
I think that might solve the pension fund funding crisis.
That would be a great gift from the market makers to behalf on all people who trade covered calls.
Exactly. We are going to buy from you. We will pay as much money as you would like us to pay for these calls. So not quite how supply and demand works. But hey, what the heck, So it's an interesting concept. I think the pension funds, if they could generate 2 or 3% per month on an out-of-the-money covered call, like I said, I think we would solve the pension funding liability fairly fast.
Yes, indeed. Folks are getting more fired up now that Schwab responded to our thing. Taylor Childers says, this dangerous tweet needs to be flagged as misinformation. Schwab did everything they could to hurt retail investors this week. Don't let them fool you. Sounds like Taylor may have gotten caught up in some of this madness out here this week as well. Hopefully it didn't burn him too badly. You know what burned all of us, though, was Vol this week. So let's get to the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, I'm just going to give it to you up front here, listener. Spoiler alert, none of us had a 35 handle on VIX land. Let's see, coming into the end of the show, let's see where we're hanging out here right now. Let's see, Spikes is at almost 35 still, 34 and change, about 34.70. We're seeing VIX cash at, let's see if I have my portfolio. There we go. If it'll work for me, about 34 and almost a half as well. So similar levels for VIX and Spikes right now. Last week it was myself, and, Mr. Meatball. We had Tom from MyX and Chris as our guest as well. And all of us were in the 20 range. Meatball was fading down to 19 again, so you know where his book was. And none of us were in a 35. So we're just going to wipe the slate clean, listeners. No winners this week. All horrible, horrible losers. So let's go on here and let's just play the game. And you know what, Mr. Rock Lobster, nice person that I am, you weren't on the show last week, so you didn't get to miss horribly by over 10 handles. So I'll let you go first. What do you feel like going for today, sir? Or, I'll let you choose. How nice is that? Do you want to go first or last? That's how nice I am today.
I'll tell you what, you're in a beneficent mood when you don't win the crystal ball. I see.
I can take my lumps like a man. Just bring it. Let's go.
Okay. I'll give you credit for that. I'll go first. And I have to say, I'm just looking at the madness. That my biggest problem is the market's not anyway. Blah 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 blah. I'm going to say we're trading with 35 right now. I'll say we back to about a 29 by next week.
29, a fairly reasonable estimation. I have to admit, I had something around that level in my head as well. I thought we'd break a 30 handle, but I don't think, given all the uncertainty that is floating around out there, doesn't seem like the folks driving up these stocks want to stop anytime soon. Maybe the brokers will have some clarity on how they can go about that in the future. Hopefully, maybe by next week, maybe we'll have become adjusted to this madness. Probably some of that, I would think, will have settled down. Of course, if you believe the story that that's spilling over into this massive sell-off in the market, then perhaps we'll have more vol afoot. But I think somewhere around, tell you what, so Mr. Rock Lobster is going a 29. I was thinking right around myself, 29 and a half, but that's not that fair to the Rock Lobster to be that close to him. So I will say 29.75. See, there you go. Nice charitable fellow that I let him go first. I let him set the line, and I don't even scum him. I come in 29. So that's your market for next week, listeners. 29 on the downside from the Rock Lobster and 29.75 for myself for next week. All right, everybody. That music means we've come to the end. We'll probably spend another 3 hours just reading your tweets and comments on what's going on in the single name volatility space. Don't worry if you need more. We're back on Monday to help hold your hand and explain all this madness. If you're listening live, we'll put some more fun stuff in after the fact here on the show in terms of some extra credit broadcasts. If you missed anything from earlier in the week, we'll put that in there for you. And a lot of good stuff. But before we go, Mr. Rock Lobster, if folks are intrigued, clearly they are, and they want to talk about all things 1,000 Vol and GameStop, banning opening transactions, all this madness, where should they go? What should they do, sir?
Come on over to optionpit.com. You can check out Mark's new Robinhood product, which is looks at momentum of what's going on at Robinhood. So I think, the timing is very good. He had a pretty phenomenal first 90 days giving it a try. I think he doubled his account size. Past performance.
So you're saying he bought GameStop then? That's what he did? He bought GameStop?
He basically bought GameStop. Yeah. I think we had maybe one GameStop purchase, and that was before it went ballistic. But anyway, and also if you want to learn about vol, everything else, if you want like an old grizzly market professional type, that's what you can get at Option Pit. If you want some, whatever, red hat guru or whatever they call them, you guys can go somewhere else. So anyway, come to Option Pit, get some learning on.
There you go. Head to Option Pit. Get your learning on Indeed. You know where to go to learn more about all things spikes? It's just MyAxOptions.com/spikes. You go there. You can check out the data for spikes, current quotes, historical data. You get some cool graphs, press release of what's coming up in the land of, let's say, Viking/V spikes, the futures, all that good stuff, and a whole bunch more. Even a link to a cool show called Volatility Views. What more could you possibly ask for? From Volatility Destination, MyAxOptions.com/spikes. And you also know where to go to find out more about our friends over there in Matrix Land. MatrixExecutions.com is the place to go to learn everything about execution services and trading technology all in one place. Get some color on the paper that they're seeing actually going up over there, which I'm sure is pretty crazy right now. So MatrixExecutions.com is the place to go. And on behalf of our friends over there at Matrix and indeed at MyAx and in the land of the pit and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions, for voting so fervently in our polls. Keep it all coming. Remember, if you like what you hear, keep rating and reviewing so new folks have a place to turn in these troubled times. We'll see you back here on Monday for the option block and then all the way through to next Friday for another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.